What is going on, everyone? I hope you are all having a fantastic day. So a few weeks ago, we looked at SoFi Invest, and I received a lot of questions on how to actually get started with investing. So today, I want to give you a step-by-step guide on exactly how to get started, and it doesn't matter if you have $10 or $10 million. The basic principles of investing are the same. So if you don't have SoFi yet and you are brand new to investing and want a great and easy-to-use platform, then right now they will give you $75 for absolutely free when you open and fund an account with them. So if you want to get $75 for free and get started with your investing journey today, then be sure to use that first link down in the description. Now, if SoFi isn't your platform of choice, that is totally fine, because the steps that we're going to talk about today will really apply to any brokerage or platform. So with that being said, be sure to hit the like button and subscribe, and let's jump right into it. Alright, so the first thing you want to do when getting started with investing is obviously to choose an investing platform and open an account with them. Now, today we're going to be taking a more in-depth look at the SoFi investing platform, and if you do want a more comprehensive review of that platform, then be sure to check out that video that I did a few weeks ago on my channel. But there are tons of other options, including other mobile platforms like Robinhood and Webull, as well as some more traditional options like TD Ameritrade or even Fidelity. So do some research and decide what platform is best for you, but at the end of the day, they're all pretty similar, and for me, it's just easier to have all of my finances under one umbrella, which is why I highly recommend SoFi Money and use their platform personally. But remember, you can always change brokerages or have multiple accounts down the road, so if you do decide in the future that you want access to a wider variety of investment opportunities, then that is always an option in the future, and I don't want you to think that this is a once and done decision. So once you've opened an investing account, the next step is obviously to fund that account. And that brings us to what step 2 actually is, and that is making what I like to call your investing budget. Now, there's a reason that I refer to this as a budget, and I will get more into that in a second, but basically, you need to decide how much money you are willing to part with for a long period of time, and are willing to put to work and risk in hopes of earning profits on that money. Now, if you have a large lump sum of money that you are ready to invest, then that is a fantastic place to start. But it's also important that you make your investments part of your monthly budget, because statistically, by far the most effective investment strategy is through recurring automated investments, which takes advantage of something known as dollar cost averaging. Basically, all this is you buy a little bit this month, and a little bit next month, and a little bit the month after that, and so on and so forth. And this allows you to minimize your exposure to volatility in the market, since you're averaging in at the highs and the lows, rather than dumping all of your money in at once, which could be extremely risky, since what if you bought at the top and then the market crashed? You'd probably be completely scared away from investing ever again. Now, for my friends using SoFi, this dollar cost averaging strategy could not be easier, since SoFi offers a fantastic automated investing feature that allows you to select how much you'd like to invest, how often you'd like to invest that money, and where you would like it to be invested. And on top of that, you can also set up automatic transfers from either your SoFi Money or other outside bank, and that really allows you to make everything automated, so you really never have to touch it once you get everything set up. And I promise it's really not that hard, and once it's set up, you really don't have to do anything, since it is all automated for you. Of course, playing devil's advocate, there are lots of brokerages that offer a similar automated investing feature, so if you personally are not using SoFi, then that's totally fine, and be sure to check your brokerage's website to see if they do have automated investing. So if you have a consistent monthly income, then I would aim to invest at least 15% of your take-home pay. Now, maybe that sounds like a lot, or maybe you can afford to invest a lot more than that, so it's really important to look at your financial situation, and if you really feel like you need more help with budgeting and investing, then it absolutely does not hurt to reach out to a certified financial planner for some assistance. But I promise it's not that hard, and you can do it on your own, and while I am absolutely not a certified financial planner, if you do have any questions, I'm more than happy to answer them for you and give you my unprofessional opinion. Alright, so we've selected a brokerage, we've funded an account, and now it's time for the most daunting part for most people, and that is picking what to invest in. Now, there are a million opinions and strategies on what the best strategy is, and it's so easy to get confused and distracted. I mean, you have Dave Ramsey saying you can get 12% by investing in mutual funds, countless stock trading gurus telling you that you should day trade leveraged ETFs, and of course, Tai Lopez telling you to I think he just wants you to read books.
Knowledge.
And look, just like the brokerages, there are lots of options, but at the end of the day, you've got to make a decision, and regardless of your decision, it's really important that you stay consistent. The worst thing you can do is day trade for a month, then decide that Bitcoin is the best strategy, then buy index funds for a while, then do nothing the next month but read a lot of books. Not that reading is bad, but at some point you actually have to invest your money. Now, in my personal, unprofessional, not a financial planner opinion, consistent long-term investing in index funds or ETFs is easily the best strategy for 99% of individuals. Now, I'm sure I will get comments saying,
the real money's in real estate,
or
mutual funds get a higher return,
or even
knowledge.
But look, you are free to do whatever you want with your money. This is just the strategy that has worked best for me and frankly for a lot of other people who want a hands-off approach to their investing. So with that being said, hear me out. Index funds and ETFs charge a significantly lower management fee than something like a mutual fund, since there is no one actively managing your money. Now, you may think that you want someone actively managing your money, but I promise that is not the case, since statistically, diversified index funds over a long period of time outperform your average mutual fund. Sure, you might get some genius fund manager who really does well for a few years, but the chances of that person being there for 30 years or more and being able to consistently beat the market is extremely rare, and on top of that, they're going to charge a much higher management fee for their service. So as far as index funds, I personally keep it really simple and use one called VT-SAX, which is an S&P 500 fund, meaning it is an index of the top 500 companies in the United States. Now, if you're on the SoFi platform, you'll want to get what's called an ETF, which is very similar to an index fund, and the ETF equivalent of VT-SAX is called VOO, which is also managed by Vanguard. But this is just what I use, and by no means does this mean that you should go buy these funds. Check out the discovery section on the SoFi app and see if there are any trending investments that are interesting to you. You can also check out the various funds that are on there from Vanguard and a lot of other companies, as well as SoFi's very own diversified ETFs. Now, just a quick side note, if you do use that first link in the description, you can get $75 of VOO or whatever investment you think is interesting for absolutely free, so don't forget to use that link in the description. Now, even though these funds are diversified across hundreds and sometimes even thousands of companies, it is always a good idea to further protect yourself from the volatility in the market once you do get the ball rolling. So once that happens, I highly recommend that, unprofessionally of course, you do pick up some bond index funds, as well as a REIT, which is a real estate investment trust. I personally keep about 70% of my investments in S&P 500 related funds, but that's just because I'm younger and can take on more risk as a result. So if you are a little bit older, then you want to be owning more bonds and less stocks, since that is less risky and is really important, especially if you're close to retirement. But remember to keep it stupid simple, or as I prefer, keep it simple stupid. If you're just starting off and you only have $100 to invest with, then just start by buying one ETF just to get the ball rolling, because I promise you that is by far the most important part. And if you're using the SoFi platform, then you can get started with as little as $1 thanks to their fractional share feature, which allows you to purchase a small percentage of one share of a stock or ETF that otherwise would be completely out of your reach and unaffordable. You can research and read books,
knowledge,
and watch videos till you're dizzy, but the most common mistake people make is not actually investing their money. Don't get me wrong, research is important, but actually taking action is by far more important, especially when we're looking at compound interest, because pushing it off just another year could lead to a significant decrease in profits down the road. Now, this brings me to another important point, which is never try to time the market. You've probably heard a lot about this recently because the market's been really volatile because of but trying to time the market just doesn't work, and it doesn't make any sense. If you're using the strategy that we talked about earlier in the video, then you aren't investing for 1 year or even 5 years. You are investing for the long term. And what may seem like crazy volatility right now will be nothing compared to the long-term growth that you will see over the next 20 or 30 years. But consistently waiting for the next market crash is a horrible idea, and I promise you just need to get the ball rolling. Now, I did make an entire video on why timing the market is statistically a horrible idea, but for some reason that video did not get pushed by the YouTube algorithm at all, so be sure to check out that video because I talk about a really, really great study that shows statistical proof on why dollar cost averaging that we talked about earlier is by far the best investing strategy. So once you've done all these steps and made your investment, that's really it, and it's important to monitor your money and see how your investments are doing. But my bonus tip to you is don't be that paranoid investor who's checking their account every single day. First of all, you'll drop drive yourself crazy, and also you're more likely to panic during short-term volatility and sell everything, which throws that entire long-term plan out the window. Pick a day at the beginning or the end of the month to go on and see how your investments are doing, but I really encourage you to try not to look at it all the time, as weird as that may sound, because most people, especially if you're brand new to investing, will panic and just decide that investing is not for them and just sell everything. But I promise that long-term consistent strategy will work. Just stay consistent, leave your money alone, and let it go to work for you, and you will be just fine. You really don't have to be some genius Wall Street guru to set you and your family up for a really stable financial future. So again, I don't care if you have $1 to your name or you're watching this in your mansion right now. The most important thing is getting started. And if you're brand new to investing, then I genuinely do believe that the SoFi investing platform is the best place to start. Again, I don't work for them, I'm not paid by them, I've just tried pretty much every platform there is, and I genuinely believe that this is the best platform to manage your overall financial health. So be sure to use that first link in the description to get your $75 for free and get started with your investing journey now. If you have any questions at all, I am not a certified financial planner, I'm just a guy on the internet, but I'm more than happy to help you get started with your investing journey and answer any questions that you may have, since I know it can be a very scary process. But once you get started, it really is a downhill battle. So with that being said, be sure to hit the like button and subscribe if you did enjoy today's video, and use that first link in the description to start your investing journey today. And of course, take it easy, and I'll see you in the next one.